Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Thursday morning, we're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, good morning, folks. You know, it's reading so well, it's sounding so good.
Yeah.
Because these days, when we look at the markets and the headlines, it's US markets on a 4-day down streak and the Indian market on a 5-day up streak. So the tables seem to have turned. Don't want to jinx it, fingers crossed, but it's been good going.
Well, that's right. You know, I was just going to, even I was thinking about that. Outperformance after a while, right? We were getting used to the 6-week losing streak. Then we broke that and we're bracing for another winning streak. So, you know, pretty good morning.
Let's whisper it. Say it too loudly. Anyway, it's looked good, right? I mean, 5 days in a trot, and that kind of almost basically cuts through the 6-day losing streak that we had earlier before that. Now, this is, of course, the Wall Street action, and we were pointing this out yesterday morning as well, that maybe, at least the fear is that mega-cap tech in the US is at the brink of a correction. Then we had Lawrence Blanco yesterday during the day, in the morning actually, and he said, well, you know, a stock like NVIDIA, which is the poster child for tech AI, mega-cap AI in the US, is close below the 20-day moving average. So that's typically a bit of a signal. We'll see. I mean, we've had many of these dips which get bought into. And by the way, even yesterday, while those rates are what they are by close, they were off the lows by quite a bit. So Amazon, Apple, Intel, etc., all up on your screen in terms of what they finally closed at. So that was the action. And I think, at least in terms of just the action from here, it's very much is focused on what the Nasdaq and within the Nasdaq, those 7-10 stocks are really going to do. The 10-year yield was down about 2 basis points, 4.3%. You had FOMC minutes which came through. Majority of the officials, at least the minutes tell us, this is the July FOMC, majority of the officials see inflation risks outweighing employment risk. Later today, we have the Jackson Hole Symposium. And it'll kick off, and I think the Fed Chair Powell's speech was only tomorrow on Friday. Trump called on, and this is, of course, the attack on the Fed, right? Trump called on Federal Reserve's, one of the governors, Cook, to resign after allegations of mortgage fraud. She, of course, firmly pushed back on this particular allegation. The idea is this, right? Another vacancy at the Fed essentially allows President Trump to place another dove who will be more than willing to lower interest rates. That seems to be the play. But, I mean, markets, of course, have gotten used to this. By the way, a Wall Street Journal article this morning which kind of talks about the attacks on the Fed and how they perhaps are intensifying. Oil prices are the only other macro variable in focus. They're up about 2%. We ended about at about $67 per barrel. Now, I'll just circle and tie in the levels here where we leave off. So markets been up for 5 days in a row. Actually, last 2 days, the price action has been pretty similar. I mean, slightly sideways, 940, 945, and then the market kind of perks up and goes up again. So these are the levels. 25,160 is the 61.8% retracement. We, I think, left off about 100 points off that level yesterday. So that's the first one. Immediate support is the 40-hourly exponential moving average, which is the 24,847 level. So very, very close by. About 0.5%, 0.75%, 1% from where we left off yesterday. Bank Nifty, day before yesterday, closed almost exactly at the 20-day moving average. Yesterday it closed lower. So basically, it's kind of sold off from the daily resistance levels, daily averages essentially. Here, immediate resistance is 56,156, which is the recent high. And the next resistance is the 50% retracement level, which is 56,267. So these are the two resistances, again, very close by. I'm not even going to the 61.8, which, of course, will come into play once we take these out. Immediate support is the 40-hourly exponential, like the Nifty, which is 55,600, and then 55,450 levels come into play as well. GIFT Nifty gives you a quick sense of how we like it to start. More than anything else, I mean, you know, the breadth, the kind of mid and small cap stocks which have been rallying over the last couple of days has been pretty impressive. It's not like one sector, it's not this or that sector. It has been very disaggregated. and really across the board. So that's, and we'll put out a lot of these stocks here over the next 30, 40 minutes going into market open. 24 points higher on the GIFT Nifty is where we stand. But futures and options, how are things stacking up? Nigel, over to you.
Well, in a matter of few trading sessions, India has gone from the underperforming market to the outperforming market. And that's the feel-good factor, right? But today is the crucial weekly expiry. And we'll brace for some volatility in the final hour of trades. Will it go to the bulls and bears? Well, we'll know as the course of the day does progress. Now, in yesterday's trading session, the Nifty, there were some shorts that covered out for the market on the whole. Though on the Nifty bank, that appears to be the shorting candidate. And the shorts are heavily stacked in the Nifty bank. And it's been underperforming. So the bigger short covering bounce will come once the Nifty bank, the shorts out there, they do see some kind of release. And in trade yesterday, the FIs, they went ahead, they added some short positions. Keep in mind that we have bounced 700 points from the recent low, and the FI short in percentage terms is still at around 90%. So that massive short covering that we've been waiting for, that's still due, right? Because, the FI net short positions continue to hold at elevated levels. Moving to, the options data then, the PCR has moved gradually now towards the higher end of the range. So around 1.3 is what it is at. Normally, you have seen it peak out at around 1.6 or thereabouts. So it's closer to the upper end of the range. But the call writers, they still believe that they've got this covered and higher levels will be protected. So between the 25,100 call and the 25,050, there were close to 90 lakh shares that were added out there. And the premium that's been eaten into in yesterday's trading session was roughly around 40 to around 60 rupees. And though you got the direction right yesterday, because the Nifty ended in the green, but the premiums did decay, telling you that the call writers, they are very, very aggressive at that level. Though on the downside, you did see some put writing. So the levels for the day, going by the kind of put writing we saw at the 25,000 put, well, the 24,900 mark, that's the crucial support mark that you're looking at on the downside. And we ended in this resistance zone. We need to get past this 25,100 mark. It's the extremely important mark on the upside. If we can trade above that, then the bulls will fancy their chances to see a bit of a spurt towards the end of trade. So 25,100 becomes the crucial mark on the upside. And you know what? Another encouraging aspect in the last few trading sessions is on a day-to-day basis, you have the Nifty that's gradually making higher highs. That's good news, right? So for today's trade, first you'll want to get past this 2589 odd mark. The Nifty bank, that's facing resistance and in that zone of around 20 and the 50 DMA. So it's a couple of 100 points away from those levels. Once it gets past this zone, which comes in at around 56,200 odd, then the Nifty bank will join the party. Stocks that I'm looking at, well, yesterday we were telling you midway through the day and towards the end as well. PG Electroplast, the massive addition in terms of open interest from the high yesterday, the stock did come off and it's likely to come in the FNO band. That's precisely what happened. So that's back into the band. The bulls will want it at least to defend the recent low, which is a good 10% away from current levels. The other stocks that I'm looking at is we're due for the Nifty announcement with regard to the changes and stocks that could come in. And brokerages, most of them, they estimate that both these two could be part of it. Interglobe Aviation and Max Health. So this announcement is due. I'll keep an eye out on both these two stocks.
Okay, we'll keep them in mind for sure. By the way, folks, just wanted to point out that CNBC did a special edition of the Fed survey, the Wyoming edition. And Kevin Hessett's name has come right on top in terms of who the next Fed chief could likely be, even as Mr. Trump now trains his guns on Lisa Cook, alleging that there is a mortgage fraud. So never a dull moment when you're talking about the US president and the US Federal Reserve. Well, Asian markets, actually, just to quickly wrap this up, are slightly mixed, but there's more green than red for sure. You can see the Hang Seng is flat. The mainland Chinese markets are doing very well. Japan is the only major market, like yesterday, it's seeing a little bit of red. Now let's move on to the equity call of the morning. Venugopal Gare of Bernstein says that their broad analysis yields that we're looking at a potential turnaround phase for consumption in India. He says the increased policy focus this year, which started from tax cuts and extended to rate cuts and now GST relief, further signals the government's intent to boost this part of the economy. He says they upgraded staples to mild overweight last month and durables to overweight earlier this year. They stay selectively overweight on pockets of opportunity in other discretionary areas like QSR, retail and auto. He says they will continue with those calls while staying equal weight on utilities and underweight on industrials. So it's full throttle consumer for Bernstein. That's Venugopal's call coming in.